Hi everyone, this is a technical analysis on USDJPY. Let's start with a fundamental overview first. Last Thursday, Wall Street Journal's Timmy Rouse published an article which seemed suggesting that a 50 bps cut was still being discussed. The market responded by raising 50 bps cut probabilities to around 40% from 13% before the news. Nick Timmy Rouse is considered a Fed insider, so the market is attentive to all of his pieces concerning potential Fed decisions. Since then, the 50 bps camp got more vocal, and the probability for the Fed to cut by 50 bps at the upcoming meeting stands now around 70%, with a total of 120 bps of easing by year end. This repricing weakened the US dollar across the board as Treasury yields fell further. Once we are done with the Fed decision, though, the focus will switch back to the economic data. In case we start to see better figures, the market might start to pare back the aggressive easing expected in 2025, supporting the greenback in the short term. For the BOJ, the market sees a 96% probability of no change at the upcoming meeting and a total of 8 bps of tightening by year end. The central bank will likely wait for the Fed to be a bit more down the road in their easing cycle to avoid too much market volatility. Now, on the daily time frame, we can see that USDJPY is now testing this key 140.20 level. This is where we can expect the buyers to step in with the fine risk below the level to position for a rally into the 150 handle. The sellers, on the other hand, we want to see the price breaking lower to increase the bearish bets into the 137 handle. On the 4-hour chart, we can see that we have this downward trend line defining the current bearish momentum. The sellers will likely lean on the trend line with a defined risk above it to position for a break below the 140.20 support with a better risk towards setup. The buyers, on the other hand, will want to see the price breaking higher to increase the bullish bets into this next major trend line around the 145 handle. On the 1-hour chart, we can see that we have also this 50% Fibonacci retracement level adding confluence to the trend line. There's not much else to add here, as the buyers will look for a breakout to the upside, while the sellers will lean on the trend line for a drop into new lows. These red lines define the average daily range for today. For the upcoming catalysts, today we get the US retail sales and the US industrial production data. Tomorrow we have the FOMC rate decision. On Thursday we get the latest US jobless claims figures. And on Friday we conclude with the Japanese CPI and the BOJ rate decision.